Okay. So yes, okay. Oh goodness me. Yes, it's all coming through. It's all coming through. We have honest people saying they have blown trading accounts. Now, it's not easy, is it? It's not easy. We have that whole Superman effect that comes over us. I talk about this on my Forex one-on-one show. But you start trading, you take your first trading, it goes right, and all of a sudden you feel, I got this. I know exactly what I'm doing. And you fly into trades and you over leverage and you blow your account. Okay. So that is a very, very common issue. Also, let me know, have you ever traded and you didn't have a clue about the currency pair that you're trading? You've actually just traded. You have no knowledge of the currency pair. You have done no research. You don't even know how much you're getting paid per pip in the trade that you're in. Okay.
Yep.
So people saying yes, no. Yes, I know that some people haven't yet got to that stage. That's fine. Yes, yes, yes. Okay. This is what happens. This is generally what happens. So I'm going to come off grid view from my end, and I'm going to go back to speaker view. I'm going to be sharing my screen with everybody and just outline the whole plan. So if this is, you know, people, when you make a guarantee, it's always difficult because it comes back to you, right? I am going to guarantee if you are following the steps that I'm teaching you today, if you follow the steps I teach you today, you will not blow your trading account. You will not blow your trading account at all. Okay. That is a guarantee, because the method that I'm about to show you, the tools that you're going to be using will mitigate all your losses. Now, here's the caveat. The thing about this is you have to exercise patience. This is the most important thing. If you are able to exercise patience, then you will do very well with this strategy, okay? So first thing first, let me get my screen up. I'm gonna share my other screen. Let me get this up. Oh, goodness me. Are you excited? If you're excited about
Yes,
it, one
absolutely.
chat box, you're excited.
Ready to
Paul's
roll.
excited. Paul's like, yes. I'm excited. That's good. That's good. That's good. So yes, good people. What I would say, can you all see my screen, please?
Yeah.
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 Fantastic. Brilliant, brilliant. Okay, what I'm going to do is, because from here, I'm going to be doing the tutorial. So I'd ask if you can mute yourselves and just use the chat to communicate. And then what I'm going to do is I will provide an opportunity for people to give feedback at different points. So I'll take questions at different points. So yes, if you could just mute yourselves, that'd be fantastic. Okay, so let's go. So what's going to happen today? Today, we're going to focus on setup. Because this is going to be a weekly session, today is probably going to be the slowest session, and it's slow on purpose. I want every single person in this call to get on the same page. And this doesn't matter if you're an absolute novice beginner or if you have experience. We all need to get to the same page today in terms of the tools that we're going to use and in terms of how we're setting up. The setup is imperative, because really, what I'm giving you right now is beyond just the trading strategy for entry and stop loss and all of that. This is a trader's mindset. I'm trying to bring you all into a professional trader mindset. So we are not playing with this. We're not having a go at this, okay? This is actually trading like a professional, okay? And we'll get into that a bit more, but today is all about setup. We'll be getting tabs open. Have you all got a laptop? Some of you may be using Zoom on your, can the setup be done on a mobile phone? Okay, that's a good question. So if you are using Zoom on a mobile phone, it would be very good if you had a laptop to use as well. Or if you are using Zoom right now and you have Zoom open, it would be good if you have another tab open for you to set up everything that you need to for today. So I'll give you a few seconds to get another device or to get yourself set up like that, because it's really important that we're doing this from a computer as opposed to just from a mobile phone. I want to get you guys to a place where everybody's got multiple screens for their trades. This is what we need to get to, okay? Professional traders have multiple screens. Some people have, my cousin is a professional trader. He has 4 screens open and he has different pairs on different screens. We need to get to that place. But the only reason why we will use a mobile phone at all will be just to check up on where our positions are. We're not going to be executing trades from our mobile phones. We're going to leave that to the gamblers. We're going to leave that to people who are not serious. We are serious, so we're going to be using a computer screen. We're going to be analyzing properly. We're going to have the proper indicators up. We're going for it, okay? So that should have given people enough time to get a laptop. I'm going to be sharing my personal trading plan with you, okay? This is my personal trading plan. And what I'm going to do is I'm going to create a copy of this trading plan and I'm going to share it as a Google Doc. And then that will enable you to actually save a localized copy. And there will be certain elements that you'd want to tweak. Okay, certain things you will want to leave the same, but other elements you will want to tweak because they will be personal to your targets. Okay, but we'll be having a look at the trading plan. We'll be able to review that and amend it. Now we'll be having a look at compounding targets. Again, this will be personal to you, but it will be restricted to the amount that you have in your account because we're not going to over leverage. The growth will be compounded over time. Okay, so we're going to look at that. We are going to, so today, you will have a compound plan. You will have a trading plan, okay? Are you starting to see the vision here? We'll also have a look at the risk assessment tool that I've created specifically and exclusively for our group. Some people are going to be begging for this tool in the future because they're going to find out actually in this group, we're trading, we're not losing our capital. The capital that we have in there is risked sensibly and we're not blowing accounts. So people are going to say, what on earth are you guys doing? They're going to want to get hold of this tool. So for now, you guys are going to get your heads around using this tool and you are going to use it. Again, it's all about patience. So we'll be looking at the risk assessment tool. And then finally, it'll be about chart analysis in accordance with the trading plan. Okay. So the first thing that I want you to do, as I said, if you have another device, sorry, someone's just sent a message. So my water is going down, so I'm going to see, sorry, I'm doing the phones with you. So that's perfectly fine. Whoever sent a message, okay. Yeah, so if you're setting up and getting another device up, that's absolutely fine, no problem. So guys, let's get some tabs open on your devices. So first of all, I would like you to get open a Google Docs tab. And the reason why Google Docs and not Microsoft Word, we're going to be using tabs. So it's just going to be open. And with Google Docs, if you've got a Gmail account, this will be straightforward for you. If you do not have a Gmail account and you cannot access Google Docs, I'm going to give you a few seconds to create a Gmail account because this is the simplest way that, one, we're all able to probably get into the same documents, share documents, and also with certain times, you may want to give me shared access to your trading plan so that I can actually see your trading plan on my computer, edit, amend while we're talking one-to-one. It's very, very simple and it's free. So open up a tab for Google Docs. I'm going to be asking people in a moment to drop in their Gmail email address into the chat, because what I'm going to do is I'm going to give you shared access to a copy of that document so you can then make a copy for yourself. Okay, so one tab with Google Docs open. Another tab open with Google Sheets. One will be a blank Google Sheet and one will be the risk assessment. Again, I'm going to give you a copy of that. Another one with CTrader. Now, CTrader, I'm going to get into the specifics of this tool when I open it up. But CTrader, I use a broker called Pepperstone, and I find this broker so useful. I don't know if you're like me, but I don't like, do you know what? When it comes to using the MT4 platform, one of the biggest drawbacks for me is the whole calculating pips business, okay? I didn't get into trading so that I can start doing quick maths with all of those decimal places there. Do you understand? So to me, you have a number to 5 decimal places, and I'm supposed to be able to subtract that number from another number with 5 decimal places. That it's just a lot of digits. Okay, this is me from my brain. I work very simple. I like things simple. Okay, so yes, I could get a pen and paper and I could do how much time have I lost by calculating those pips? I don't like it. So I use C-Trader, and I use a broker called Pepperstone. If you like details of the broker that I use, I can give you a link at a later date, and you'll be able to jump straight to that trade. Because what that does is it actually shows me the amount of pips that my stop loss is. It tells me in pips, it tells me in money. Shows me my pips for my take profit. It shows me in pips, shows me in money, and it's just there. I don't have to work too hard with it. Also, there's a tool called the crosshairs tool, and I'll show you what that is if you don't know. And it's a tool you use to measure pip distance and time. It's kind of when you move it, I'll show you later. It's literally a cross, but as you move it, it just works better on C-Trader is what I find. So we'll have tabs open with that. If you're not familiar with Web Trader, okay, and also I did drop in the group, if you are brand new, it will be very, very important for you to watch the Forex 101 sessions that I have done so far, okay? They're all on my website. I'm going to type my website into the chat. Edu.com. Okay, so that's my website. And on that website, you'll be able to click the trading tab. Actually, if you type in /trading, you'll get to the trading tab and you'll be able to see all the previous videos I have for Forex 101. Watch the teaching sessions. I do teaching portions in each one of them. You don't have to watch the interview part. Sometimes I have guests and I do special interviews with them. You don't have to watch that. But it is important that you watch the teaching sessions. I'm adding information there that you won't necessarily find on the platform, on the IM platform. So it fills in some gaps for certain people. So again, with this, if we're going to be pros, we need to not rush. We need to take our time and we need to learn the information. Okay, just a quick test. I want somebody to type in the chat box what CFD stands for. What does CFD stand for? I will wait. Okay, let me rephrase the question. If you do not know what CFD stands for, type in IDK in the chat box. Type in IDK. I don't know. Type it in the chat box. Okay. All right. We are traders, okay? Now, I think Paul Morrison has been watching my shows. He does know. He says, I don't know. I think it's contracts for difference. It's exactly contracts for difference. Contracts for difference. What's a contract for difference? A contract for difference is what allows us to be able to trade. We could not afford to trade. We would have had to have had a minimum of £100,000 to be able to trade in the markets. And what contract for difference means is that actually you can use leverage to be able to trade and take part in the market. So again, things like that, it's good to know, because when you go to these online tools, website, it will say things like contract amount, and your brain will be exploding. You'll be thinking, so what on earth is contract amount? You know, I know about lot size. I know about pips, but what is this contract size? Even units, it might say units, but you don't know that that's the equivalent of lots. All of these things are things that you really need to get to know. So if you watch the Forex 101 teaching points, you'll find those things out. Okay. But anyway, that's a side point as to why I use C-Trader. Okay, so I can calculate pips if I wanted to, if I really wanted to. I don't think that's my job. And I think technology should do it. That's why I use C-Trader. Anyway, also open a tab, circlemarkets.com. And I think it'll be /Forex compounding calculator. We are going to use that tool to create our compounding plan. Again, you don't have to be a spreadsheet whiz, okay? And this is the thing about trading. It's very easy to get into. But when you kind of look into a lot of detail, you see all of these complex spreadsheets, people doing all these calculations. If somebody has done it for you, use it. If there's a website out there that has things done for you, use it. But we're going to be using this website as well. And then, yeah, I've already said with the Google Sheets, blank. And then open up a tab for currency strength meter. If you have not been using this, this is a very good tool that you possibly should be using right now. Okay, so let's get into this. So the first thing is the spreadsheet. I want to share. I want to go through the trading plan with you so that you can see how this works. This is a 4-step trading plan. So in fact, what I would like you all to do is I'm going to give you access to a copy of this. And what you will do when you open the copy is you are going to save it to your local Google Drive. So type your Google Gmail account email address into the chat. And I'm going to do this, and I'm going to do this, make a copy of trading plan there. And then I'm going to enter those email addresses into this and share it with you all so that you can have a copy of the shared doc. Okay, fantastic. I will wait a few seconds before for everybody to drop theirs in, and I'll do it. So in the meantime, I'll just read through it. Okay, so number 1 on the trading plan is a setup. Okay, now regarding the setup, what I usually do is I use the 1 hour and I use the 2 hour and 4 hour charts to identify the structure and the trend of the market. If I'm going into a trade, it will generally be for an hour at least. Okay, that's because the bigger movements, not at this time of year, by the way. Anybody who's been trading right now during August has been waiting a long time for small, tiny movements to happen. That's because all the traders are on holiday. They're spending their money and they're not trading. So there's not much liquidity moving the markets as they usually would. However, usually markets are moving quite a lot. We know that there's always opportunities. And what would happen is I would be looking at H1 so that I can see the type of position I want to take. Now, to confirm that trend, I would use H2, and to confirm that, I would use H4. Because looking long term, I would also use those larger charts, larger time frames to check where the ultimate high, the ultimate low would be, and then zooming in, I could see, and that will enable me. Now, it'll make more sense later. It will enable me to take maybe double, triple positions potentially. Because if we're at the beginning of a trend, I can take a position from here to here, and then I can come out, and then I can re-enter after it's done its little jiggly thing. I can re-enter and take another position from here to here. If it's a short position, I could do exactly the same thing on a long. So that's why I would use H1, H2, H4 to identify structure and the trend of the market. I would consider the length of the position based on the strength of the trend in each time frame. So that's what I've just explained. So all time frames, if all time frames match, then I could consider a longer term position. And this is the type of thing, if you've watched Ballet Granville, he does when he trades. So he will look at the larger time frames, and he could leave a position in as an intraday position for a few days. And we would be mindful of swaps. Do you know what swaps are? Please tell me if you know what swaps are. Just type yes in the chat box if you know what a swap is. Let me start sharing this document with people. Share, share, share. So does anybody know what swaps are? Do people know what swaps are? Okay. Let's have a look here. Let's have a look here. No, you don't know what swaps are. Okay. Does anyone want to guess at what a swap is? Unmute yourself and give me a guess. What is a swap? What is a swap? Does anyone want to be brave? You realize all these things affect your trading. They affect your trading and you don't know. You don't know why, but you are affected. Yeah. Okay. Exchange. Okay, that's a good guess. Yeah. I mean, yeah, that's essentially what the word is, exchange. But yeah, exchange of what? Do you want to elaborate on that? What do you think is an exchange of? Anybody brave? It's the last email just now, so I get back.
I've got no idea. I recall you mentioned something before.
Right.
I think about rolling over the following day.
Right.
But I
Yes.
don't, something like that.
You've been watching my sessions. I like that. That's good.
So
That's
at the end of the day, you can either something like take your money or roll over to following day. I'm making this up, but I just recall you mentioning this in one of your calls.
That's good. I like that. Yes. So people do need to go back and watch those things. So a swap is, in fact, let me see if I can show you. I see markets. I have a demo trade running right now. Look at this thing playing around. Okay. So if you pay attention to this section here, all right. So this is C Trader. This is C Trader. So sorry, this is Web Trader. Sorry, not C Trader. Web Trader is the IC Markets. So you all should have IC Markets accounts. Okay. So now, if you are using a laptop rather than your mobile phone, this is the online MT4. So if you're not sure how to get hold of Web Trader, all you need to do is go to your IC Markets account and then go to Tools, and you will see Web Trader as a tool. You click that, it just opens up a new tab. Simple as. Opens up a tab, and now you've got all of your MT4 account online. Okay, it's easier to access online. It means you don't have to download anything. But paying attention to this here. I've got the order. It's a sell order. Lot size 0.01. It's on the demo account. Symbol, that's GBP USD. Entry price, stop loss, take profit, the current price, and then swap. Okay, so now what this swap is saying is actually there's -2p on this trade already. Now, why is there -2p on this trade already? Well, there's -2p on this trade already because it was left in overnight, over the night of a trading session. So where for the UK, for us, it will be at 10 p.m. If you have a trade that stays in at 10 p.m., you will have swaps happen on your trade. Now, how do you explain swaps? Well, simply said, if you are long on a position or short on a position, and one of those currencies is stronger than the other, you will either be benefiting from the interest or you will be losing out on the interest depending on if you have taken the side of the stronger or weaker one. So if your trade is in favor of the stronger one and you cross over that boundary, you will incur positive interest. Yeah, so that could have been +2. Yeah, that's how swaps work. But because it was on the other side on the overnight period, actually I've incurred a loss of 2p. So you can see, however the price is moving, obviously this is below the entry, it's always -2 of that. Does that make sense? Okay. Well, that's swaps anyway. So if I go back to a trading plan, you should all have been received an email saying that you have access to that document, this document, by the way. So again, this is something you can check before. So you check the currency strength regarding each position for swap implications when crossing over the end of the session. So to gain interest as much as possible. So that's just being smart. If you're taking a position, you're thinking to yourself, okay, I want to make money from this trade, but I also don't want to lose money on swaps. So that may or may not influence the position you take. Swaps is a minimal charge. So if you think about it, that's 2p for one day. If I leave it for tonight, it may potentially swing back in my favor, or it may incur more. Do you understand? But if you leave a position for a long time, then those swaps will add up either against you or for you. I've had both. I've had like a few pounds plus in swaps before. That's because of the trade size. Okay, so another part of this strategy for the setup is to use the Ichimoku Kinko Hayo cloud. That is the indicator. You can get that. It's on the Web Trader. If you're on Web Trader, you will go to Insert, you'll go to Indicators, and then you will go to Trend. Okay, so that's, again, if you're on Web Trader, you go to Insert, you go to Indicators, then you go to Trend, and you'll see it there, Ichimoku Kinko Hayo. And on C Trader, which I'll show you later, you can do exactly the same type of thing. This is C Trader, by the way, such a delicious platform. I love it so much. But yes, I'm not going to go into it right now. That's how to do it, because I believe most people here are on MT4. Okay, so we'll leave it at that. Okay, so that's getting up that indicator. And that indicator, as per usual, probably most of you have heard Bass teach on it and other people teach using it. It's basically checking if price is above or below the cloud and checking trend analysis for consistency. Okay, C. We are going to trade GBP USD, NZD USD, Australian dollar Swiss franc, and Euro Swiss franc in the first instances. Why? Because they are the closest to the levels that we talk about. You know when people talk about 0.01, a micro lot equals 10 pence per pip, yes? And then they say 0.1, a mini lot equals £1 per pip. And then they say 1.0, which is a standard lot, equals £1 per pip. Well, that's not true for any other pair apart from Euro GBP. For us in the UK, because we are trading using Great British pounds, Euro GBP is the only currency pair that will give you that return. Everything else will be less. Every other currency pair will be less. So you need to check which currency pairs have as close to that as possible. And these are they. Okay, so GBP USD, NZD USD, Old Chef, and Euro Chef are all very close to that 10p, £1, £10 mark per pip movement. We want to be in trades where when the pips are moving, we are getting paid adequately. Okay, we don't want to be in these currencies where we put in a lot of work in our analysis. We've caught 100 pips and we've only got £5 from. Do you understand? Like the pip value should equal money, and this is why it's great to have these pip clubs, 100 pip club, etc. But it can be very deceptive. The amount of pip movement doesn't equal value. Paul, what was that message that I said to you the other day? You asked that question. Just unmute yourself. I don't know if you've got the message there. You can read it out. But Paul asked the question: what does this mean in monetary terms? Because somebody, I think it was 1,000 pips, they were in the 1,000 pip club. Have you got the message, Paul?
1 second, I'm just looking. One sec.
Because yeah, it's all about context. It depends on the currency pairs that you're trading with.
Depends on the currency pair traded. I'll explain on Monday.
So
6,000 pips at 0.01. Lot size equals 475.21 if you're looking at EURCHF. But with EURTRY, it equals to £82.
Right. So you see the difference there. In one trade, what was it? How many pips?
6,000.
6,000 pips equals £82 for one currency pair. And for the other currency pair, it was 400 and something?
Yeah, 475.21.
Okay. So some people think that the currency pair doesn't matter. You just pick any currency pair and you just trade. Well, that's not true. We need to be very aware of how much we're paid per pip and take the trades that are most valuable to us. Okay. Even if it means, wait, I'll tell you what, I'm not trading today. I know that because one, I'm helping you guys set up. Two, it's a Monday. There's not many great moves that happen on a Monday. And three, I would rather do some proper analysis. And this is what I want to train you all to do, to empower you to one, follow this plan. Two, follow the tricks that I show you to actually analyze the charts, analyze properly and take proper movements that if you wait for it, once it happens, you are happy. Okay. And then what we'll do is we'll build up so that actually we don't have to do just one. We're going to do 3 or 4, depending on our scope for risk. We'll get to that. How are we doing for time? Hey, I'm moving quickly, but I'm moving slowly. Sorry. Right. So currency pairs are very important. So the trading approach here, it says that we identify trends in the market. And naturally, it's always buy low, sell high. And we have to see that as relative to the attitude of the traders in the market. If the traders feel this is a good price to buy, that's where we need to get in. It's not a case of going against what the traders feel is a fair price. And again, that kind of goes to auction market theory when it comes to trading. Again, that's something to look up on the academy. When you go to the Forex Academy, you will have some lessons from Christopher Terry towards the end. There's some people, shall I call people out? There's some people, they may not be in this group, okay? But there are some people who say they have watched all the Academy videos and they're lying. They are just flat out lying because actually some of the videos were too long for them. They started watching it and they stopped. They stopped and said, that's too much information for me. And then they said, yeah, they count that as a video they've watched. Don't be naughty. Don't skip the videos. Watch everything and consume it and understand. It's important. It's not a race. You don't have to watch them all and just tell people you've done it because you've done it quickly. It's all about retaining the information. Anyway, that's a side point. So some of you are just reading the screen and ignoring me. That's the right thing to do because it'll get things done quicker. But identifying the trends below so high. Check the entry accumulation zones for markup and markdown movements. Now, this language is in accordance with the Wyckoff principle of trading. And what that is what we call consolidation. They are accumulation zones. So you'll see that the market is accumulated. And now what will happen is you will have a spring. That's what they call a fake out. And then a breakout, okay? So it will either be a mark up, an uptrend, or it'll be a mark down. So at the end of some accumulations, I think GBP USD right now is coming towards the end of an accumulation zone for a markdown, a major markdown. The only thing that has been holding GBP USD where it is the weakness of the US dollar. And the weakness of the US dollar has been relative to coronavirus and their response to it and everything else. But the GBP is weak right now. But if you look at the price, we're looking at around $1.30. And it hasn't been up there since last year, if I do recall correctly. Hasn't been up there, or maybe the beginning of the year, maybe around January. But the price has not been that high for a long time. And if you look throughout the whole of August, it's just been consolidating nicely. And we've had a little bit of a spring because it looked like it was going to come down and it sprung up. That's what I was looking for. And I've just been messing around with it on a demo account. I am waiting for it to come out of that zone to the downside, retest that consolidation zone, and then there'll be a long-term position going down, standard. And that will be linked with the recovery of the US economy in regards to coronavirus, et cetera, things like that, but it will be strengthened. But then again, we have to look at how long you're going to be in the trade for. That's on the side point. So markup, markdowns, I don't want you to get lost in the vocab, but that's Wyckoff principle vocab. So markup consolidation for a simple break and retest above below the zone. That's exactly what I just described. Be mindful of fake outs. That's a spring. Identify patterns for consolidation. Is it a flag? Is it a wedge? Again, all these things come into play. Is it a rising wedge? Is it a falling wedge? And the flag patterns, etc. You need to be able to identify the phase of the Wyckoff principle analysis. Again, I'm going to help you with all of that. Do homework. If you are taking notes right now, you are a sensible person, because most people who get this recording won't watch it all the way back through, especially if you're in this call. If you're diligent, you'll take notes and do a Google search on those words, okay? I need to fly through this, so I don't want it to take too much time. So read the indicator, check each time frame. If it's, yeah, that makes sense by itself. Trade the position for reversal following break and retest. There we go. Okay, so risk management. Here we go. This is the meat of this whole strategy. So a maximum of 3% of account across all open trades for trading day. Now, people may have heard this before and it may not have made sense. I will say you can amend that number, but I would say no more than a maximum of 5%. You're not pros. We're not pros here. We are trying to become professionals. When we talk about a maximum of 5% risk across all open trades per day, that is talking about, if we're looking at 5%, if all your trades hit your stop loss, you would have lost £5. Now, on a £100 account, that leaves you with £95. You don't want that to be the case, because the repetition of that the next day means you've got £90. The repetition of that the next day means you've got 85. And you see the pattern here. Some of you have lived that pattern. Okay, so it's all about making sure that you're mitigating risk. And the reality is some people are trading with a risk of 60% on their account. And this is how accounts blow. That's the reality. I've had mental meetings with some people and I've put them through my risk machine, and you'd be very surprised at the results. Yes, I'm not going to expose anybody. So yes, use the risk calculator tool. We're going to have a look at that. That's this baby right here. But yes, we're going to use this risk calculator tool. Yes, so ensure the risk to reward ratio is in favor of your take profit. Some people do not check their risk to reward ratio. There's a nice, neat tool on TradingView that you can use to make sure that your risk to reward is balanced and in favor of your take profit. If it is 50-50, make sure it's really worth your time. If it's any more than 50-50, don't do it. But yeah, I'd say 1 to 5 is the best. So in terms of your stop loss, if you have a 30 pip, or let's say you have a 20 pip stop loss, that's your 1, then you would have 50 pip. Oh goodness. Sorry, my stomach is grumbling. Have I eaten today? I don't think I have. What day is it? Monday. Yeah, I need to eat. Sorry. What am I talking about? Yes, so 1 to 5. So like I said, so if you have 20 and you have 50 for your take profit, that's worth your time. Okay. Yes, you can read all that. Cap the stop loss daily. Yeah, so I've got 3% lined up with that. Review trades monthly using either MyFXbook. That is another good website to have. Take note of that if you haven't used it already. MyFXbook or your trading journal. And we're going to use our compounding plan and double that up as our trading journal as well. Okay, so aims here. These are my personal aims, and this is where you are going to edit for your personal aims. Mine is long-term saving. So I'm not going to withdraw capital. I'm going to compound it for steady growth over time. Some of you, it may not be for saving. It may be for liquidity. If you want to release capital per month, you are working towards doing so. You will have that in your plan, and you will have that as your aims. So then again, you're looking at a certain percentage return growth each month and an annual growth. And because we're compounding, this wouldn't be the growth. We would have a larger growth. And don't worry if you haven't got, if you're not grasping the percentage, it'll make sense in a second. You will also want to tweak this. This is me. I love jazz. I love gospel soul. So I have those playing. And this is literally linked with mindset. You need to have good conditions for when you're trading, okay? So setting the mood, positioning yourself. I need to buy a new chair. This chair is broken. It's like held together. Just I don't know how it's held together, but get yourself a comfy chair. Don't be like me. Get some nice music on. Make sure the environment is nice. And you don't watch open positions. Probably keep this in, this section here. Do not watch open positions. I think this is so important. We should be confident enough to be able to put in a trade because we know our strategy. We know why we're trading. We've set up, we've got a plan, we've got into charts, we've followed everything according to our plan. Therefore, we don't need to watch it. We just put the trade on and we're able to go off and do other things. Quite literally, I've made money at the park. I've made money playing with my children. I've made money watching movies. I've made money being told off by my wife. I've made money, just a lot of different scenarios where I'm not watching the charts. I do not have to watch the charts, don't have to watch it because I've just put position. I've made money sleeping, put in a position, go to bed, I sleep. I'll wake up in the morning. I love turning on my phone and it says your take profit has been filled. Lovely, lovely message. Your TP has been filled. Love it. Okay, so that's the plan, guys. Let's crack on. So what was next on here? So the Google Sheets, so this here, please type in the chat box if you know how to use this tool already, because I've done the training and I dropped it in. I tried to do it live. I was driving on the motorway, so I pre-recorded it. Please type yes if you have watched the training on how to use this tool, because it will save me a lot of time. If you haven't, type in no. I'm waiting. Oh, dear. Okay, I'm going to repost it in the group. I know some people have joined quite recently. Okay. Oh, goodness me, right. Okay. So it's no, sort of. Someone says sort of. That's a no. That's a standard no. I'm not going to expose who says sort of. Oh, probably everyone can see it in here. Look at that. Can you imagine? Ah, the hilarity. Right. Okay. So what I'm going to do is I'll explain this thing now. For those of you that should I even say? Should I say? Yeah. Basically, you'll find out some of the work that I've been doing recently has been actually working with Des on a project that he has coming up. So you're going to see. Yeah, anyway, so what you would do is you will go to this section here and you would type in the total amount in your account. So if you have £100 in your account, you type that in here. If you have £200, you'll type that in there. And then you'd set your daily risk percentage, the amount that you want to risk of that for the whole day. So if it's 5%, it calculates that automatically for you. If I change that to 3%, it automatically calculates that for me. It tells me in pounds, I'm willing to risk £6 altogether. So if all of my stop losses hit, I would have lost £6 for that whole day. Is that clear? Good stuff. So the next thing is we have 4 sections. That's the 4 fingers. Yes, 1, 2, 4 sections. So if somebody mute yourself, please. Thank you very much. God bless you for that. So, 4 sections. I'll just mute everybody. There we go. There we go. Thank you. Thank you. 4 sections. I was just going to mute all. Okay. So, we have 4 sections. The section at the top is for a buy order with currency pairs to 5 decimal places. Okay. So that's the majority of currency pairs. Okay. So if you have a buy order that you want to place, you will use this top section here. If you have a sell order, you will use this section here. The differentiation is the buy orders are in green and it's highlighted there buy. And then the sell orders are in red and it's highlighted there sell. Now, these are both for numbers up to 5 decimal places. The bottom section is for those up to 3 decimal places. That would be your golds. That would be your JPYs. Okay, so those types of pairs, you would use these because I've set this spreadsheet so that it calculates according to the decimal places. The calculations are done for you in the gray columns. So you don't need to type anything in the gray columns. Okay, so for an example, let's go to this here. Look at this, messing about. Let's bring up another currency pair. So we've got Euro NZD here. Let's zoom in on this, baby, and see what's happening. Okay, so price is currently at 1.81410. 813. Okay, let's just put this in. 81410. Excuse me, what currency feels that again? Euro NZD. Okay. Goodness me. Get out of the way, you. This thing. I didn't want to do that. This thing is in my way. And then when I hide it, it's going to be destroyed. Oh, my stomach is going for it. I really need to eat. Let me hide this thing. Hide, floated menu controls. There we go. Okay. So, go into here, let's type this in. Let's say that we want that's in an uptrend. Let's say we want a buy. We're going to say that it's in consolidation. Sorry, it's in a pullback mode. So we want to buy. Let's say it's Euro NZD. And what we're going to do is we're going to put in our pip entry at the current price 1.81370. 1.81370, and then we'll have our stop loss. So you see it's entered things in there automatically. Stop loss we'll have underneath, we'll have it at this level. This is a previous level. I did that level ages ago. I haven't looked at this for a long time. You can see how prices come here and it's respected it. This is the benefit of long-term analysis on high time frames. But I'm going to use this as a stop loss. I'm not measuring this. This isn't how I do it. I'm just showing you how the thing works. 80844. 1.808, what did I say, 44? Okay, so what has this done? I've entered in the entry, I've entered in the stop loss, it's calculated the difference, and it's shown me that that is a 52.6 stop loss distance, okay? 52 pips stop loss distance, okay? And that was just me eyeing it. So next I want to enter in the take profit. So going back here, let's have a look here. Let's use this other red line up here. So 1.82292. 1.82292. Okay, so coming out of there, this then calculates automatically for me that the pip distance for take profit is 92.2 pips. Okay, so I've got my stop loss, I've got my take profit. Now I need to find out how much this is worth in money. How much am I risking here? Okay, because I've said that I want to risk only £6 for the trading day. So I'm going to take this number, 52.6, and I'm going to use this link here, the pip calculator. And I'm going to go to this website, and this website is going to allow me to type in my pip amount, which was, what was it, 52.6? Yeah, 52.6. Pip amount, 52.6. And the pair was Euro NZD. Euro NZD. And then the trade size, it will be 0.01. I want it in micro lots, okay? And I'm trading in Great British pounds. So that tells me that it's £2.73. I'm going to round that up to 74 because there's an 8 there. £2.74 is the price that I'm risking. So I'll put that here. Stop loss distance, 2.74. That's how much I'm risking. Now, what is this next telling me? Now that I've entered this, it's telling me that I'm risking 46% of this £6. So I've got a buffer of £6 that if it hits the stop loss, I'll be happy to risk that, okay? But it's saying this £2.74 is 46% of that stop loss. So I'm safe. I've got room for other trades. And now that's for the stop loss. It also tells me that I'm risking only 1% of the entire 200 with this amount. Does that make sense? I hope it does. And then the next, I'll check how much the take profit is, 92.2. 92.2. And that is exactly the same currency pair, exactly the same trade size, Great British pounds, £4.80. 4.80. Okay, so now that tells me that I'll be growing my account by 2%. And if I go back to my aims, what I'm looking for is 5% return each month. So if in one trade in one day, I've got 2% growth, that's very good. And what you have to realize with all of this is you will have some wins and you will have some losses, okay? And it's about balancing things out. The aim of 5% may seem small to certain people, but really this is a game of patience over time. So if you know that in that one trade, you hit your take profit, you've got your 2% increase, that is great. You may have a 1% decrease in another trade. Do you understand? And it's just making sure that on average, you're working towards that overall growth. Okay, so now we've put this in here. You can see that I've got other trades that I've put into here. What this is doing is it's actually totaling up the total percentage risk for my buy orders, total percentage risk for my sell orders, and at the very bottom is telling me out of how much I want to risk, I'm risking all of it. For all of the open trades that I have right now, for this £6 that I wanted to be my cap, I'm actually risking 109%. Now that 109, it tells me, okay, I'm not going to enter any more trades. It's over the £6 mark, maybe by a few pence, but that's fine for me. I'm confident in the positions I have. I'm confident in the trades I'm taking. Not all of them are going to hit stop loss, okay? So if all of them hit stop loss, that'll be not good, but it would just mean that I've agreed with myself that I'm willing to lose £6. So if everything goes the wrong way, I have lost £6 and something. I live to trade another day. I'm happy. Chances are that's not going to be the case, especially if we're using the analysis that I'm teaching. So that is the PIP calculator. That is a risk management tool. This tool is important. Would you like access to this tool? If you would like access, type yes in the chat box, and I'm going to share a copy of this with you using the email addresses after I finish this. I'm going to crack on through the points on this. Okay, so C-Trader, Web Trader, okay, people saying yes, good, good, good. Okay, so let's get our plan up and running. So what I'd like you to do is I want you to work with me and open up a new tab that looks like this, okay? Circle Markets, circlemarkets.com/. In fact, let me just put in this link into the chat, copy. Let's send this to everyone. Paste. Okay, click this link that's in the tab. If you are on a device, you may want to just look at that and type it into your laptop. It's important you get it on a laptop because I want you to use your open tab that has your blank spreadsheet like this because we're going to do something. Okay, just type in got it. Once you got that tab open, you should be seeing what I'm seeing here, or you see something that's blank actually. You won't see with all this stuff in. Okay. Okay, Paul Morrison's got it. Anybody else got it? Okay, Maribel's got it. Okay, Andrew's got it. Fantastic. I hope this is helpful, guys. I really do hope this is helpful because, like I said, this is the initial week. So this is kind of slow going through. But as you go through this video, as you get things set up, what's going to happen is tomorrow in the group, we'll be checking where people are, making sure people are ready. And through the teaching of how to analyze, people are going to be suggesting pairs. We're going to be having a look, we're going to be having discussions, and we're going to be working towards our trading targets in a trading journey together. Fantastic, people have got it. So let me go ahead with this. So your starting balance is how much you have charged your account with. I did ask people, if you can, please start afresh today. So if you have a live trading account of £100, you would type in £100. If you have a live trading account of £200, you put that in. If you're on a demo account, and some of you may be, that is fine, you would type in the total amount for your demo account. On a phone, so I can only show one screen at a time. Okay, I understand that. I think you missed when I asked people if possible, if you could get a laptop or something else just to have next to you so you can see what's going on in Zoom and get the tabs up. If that's not possible, no problem. Still using demo, want to transfer over, that's fine, Paul. I'm going to help you set up live if you want to. So I'm going to do this very simply. Type in £100, and then I'm going to say the amount. Now, this is the amount that you want to be increasing each month. And if you're not sure of what that is, you check your trading plan, and it says here, 0.4B, 5% return each month. That's what we're aiming for. So we go here and we type in 5, okay? Now, we're gonna put the trading plan in for 12 months, okay? We wanna do this for a year. So 12 months, and then we click calculate. And now what it's showing us is that we would have increased our account to 179. And I know it says dollars, but you'd ignore that. Now, here's the trick. This is all nice, but what we want to do is get this onto a spreadsheet. And this is why we're using a laptop, because I'm going to copy all of this. Okay, so I'm going to copy all of this. And here's what I'm going to do. I'm going to go to my spreadsheet, and I'm going to paste all of this in there. Look at that. Nice and simple. So again, I was on the Forex compounding plan, Circle Markets. I almost said Black Circles, that's a tire company. Entered in my starting balance, the percentage increase that I'd like each month, the amount of months, calculate, and it gives me all of these figures. What are these figures? Well, these are the 5% increase over time, but also I think it's around the 10th month. It also increases the lot automatically for you in proportion to your profit. So where you would be initially using 0.01, I think after around 10, it would increase it to 0.02. It's done that automatically for you. I know that because the numbers work out and I've double checked. So when you've highlighted all of that, you copied it over to your spreadsheet. Here's what we're going to do. We're going to highlight this column. And this is why if you're on Google Sheets, this will be nice and easy for you. What we're going to do is we're going to go to format. We're going to go to number. We're going to go to more formats and more currencies, and we're going to change that to pounds, okay? Because it's there dollars on your sheet. It's usually there by default as dollars. I've changed mine, but that's how to change it. If it came up as dollars, and then on this column, you do the same thing, and you'd either change the currency. So you can see it's on dollars there. I'll go to format, number, more formats, more currencies, and I'll change that to pounds and then apply. So this has changed it all to pounds now, okay? Now, here's what I'd like to do. This is telling me the months. This is telling me the previous account size. Okay, so we're starting off with a 100. With a 5% increase, we've got a £5 increase on there, okay? I'm gonna change this from total to target, okay? That's what we're aiming for. So this is plotting at what the price that we're aiming for. So this, remember, is in 1 month. So after 4 weeks of trading, we should be able to look at the end of the month, and then we should be able to see that actually we're around the 105. But what I'm going to do is I'm going to create a column that says actual. And what we're going to do at the end of the month is we're going to type in the actual amount that we have at the end of that trading month. Does that make sense? Because this is not just the compounding plan. We're going to use this as our trading journal as well. So the next column, we're going to put currency pair. In fact, I'm just going to put pair traded. And then I'm going to put notes. So what am I doing here? What I'm doing is I've copied over the compounding information. So the end of month one, well, at month one, we've had £100 at the start. We are aiming for a 5% increase, which would give us a targeted amount of 105. What I'm going to do at the end of the month is I'm going to come back here and I'm going to put down what actually was the closing amount at the end of the month. And I'm hoping it will be 107, maybe 107. 107. Okay, so, and I'm going to change this to monetary amount. Now I'm going to change that. In fact, let's change this whole column. Again, format, number. I'm just going to select pounds there. So 107 pounds. That was the actual. So pairs traded. Pairs traded. And what I would do with this, I would wrap text. I would list all the pairs that are traded for that month, and I would copy that from the journal. Now the journal, this is your monthly record. So your monthly reflection of what happened that month. What you need is a daily trade journal. So each trade that you've taken for the day, you put down your currency pair, your entry, your stop loss, your take profit, and you literally you can just copy it from here. Because you've entered all of these things here, you can literally copy that and slap it into a blank spreadsheet, and then you add a column next to it for your notes. Because at the end of a trade, when it hits stop loss, when it fills the stop loss, you will want to know why. So you could type in notes that say the very long wicks for this currency pair. I wasn't aware how long the wicks were, and it seems that the trend was correct. The trade did hit the take profit eventually, but it stopped me out because the gap was too short. And that's a good note to have, because you'll remember that when you come back to that currency pair. Okay, so what you would have is you would have 5 of those per week. Okay, so for each one of your trades for Monday, Tuesday, Wednesday, Thursday, Friday, each week, and you would use those notes, and then you would say, okay, overall for the month, this is what happened, and you would just type that in your notes here. You know, good month. I will now, from now on, avoid whatever currency pair. Okay, so this will help you to have your targets. So you've got your plan, you've got your compounding targets broken down into months, and then you would have your actual amount that you've made, and then you would have a record of the pairs that you traded and the notes alongside that. Okay, so all of these things are helping you to work towards not trading blind. We are no longer trading blind. Okay, this group is not about trading blind. It's about trading with a purpose in mind. And you know what that stops? That stops your revenge trading. That trade that you get into because you've just hit a stop loss and you think to yourself, no, I knew what I was doing. I'm going straight back in. We have put an end to that. There's no more of that. Now it's all calculated. When it hits your stop loss, do you know what? We need to get some kind of stop loss hit music and we're going to celebrate. If it hits a stop loss, we're going to celebrate. We're like, yeah, hit my stop loss. I accounted for that. I knew it could happen. It's happened. I'm happy with the amount and I live to trade another day. Let's get some funky music. I'll get some James Brown or something. We'll have something we'll play if it hits stop loss. And all that will happen is if you're in the group and you've hit stop loss, you just play that music. Done. Everyone will know what's happened. Okay. And we'll have a different music for if it's hit your TP. All right. So we'll celebrate both. But what we need to do is be happy that we're surviving to trade another day. And it's not about revenge trading. Hits your stop loss, you celebrate because you've got other trades open. Hits your take profit, you celebrate. You're able to continue trading. So we're just going to flow with it. Okay, almost there, almost there. So we've done this, we've done the compound plan, and the currency strength meter, that is this website here. I'm going to drop this into the chat as well. This is a very good tool to use when it comes to assessing the current position of your pairs that you're looking for the majors at least. So you can see here, I've just refreshed the page. Do you see what I mean about GBP USD? Currently, GBP is shot. It is not got any strength in it at all. But yeah, I mean, what does this say to you? Tell me what this says. What is happening on the charts for this? Is this a buy? Is this a sell? Or is this consolidation? What is this? Type in the chat. What is it? What's happening here? Andrew, consolidation, 100% correct. 100%. What if you had AUD USD? What position would you take for that? Would you be taking a buy or a sell for AUD USD? Okay, Andrew says buy. Anybody else? For AUD USD. You can see USD very weak. AUD very strong. What would you do? Type in the chat. What would you do? What would you do? Definitely buy, Jasmine says. I love that. Buy. He's fine. Buy. Paul Morris. Okay. So we're saying that without even looking at the chart. So let's open up a chart. AUD USD. And we got C trader. AUD USD. What are we expecting to see here? Oh, look at that. Lo and behold, it's on an upward trend. We got that just by looking at the currency strength meter. So then what does that tell us? This is in addition to our analysis. This is not replacing our analysis. What we do is we do our analysis. We check what is the trend. We see that it's come up, it's done a pullback, it's come up, it's done a pullback. But what have we got? We've got a low, we've got a high, we've got a higher low, we've got a higher high, we've got a higher low, and it's pushing up. Where could it push up to? This is where the additional analysis comes in, and you'll be putting in trend lines, horizontal line. We'll be saying, okay, price has come up to this point before, and then it has turned away. So this price could be going up to there. Currently, it's reaching a point where it has peaked and it's gone back again. So again, we're looking at, right, okay, we want it to come up here, break and continue up. Do you understand? We looked at a position just from the currency strength meter. This is a bonus on top of everything else. Now let's go back to the chart and add in an indicator. Let's go in and let's add in our other, and it will be the Ichimoku Kenko Hayo, and we'll leave everything as is. Okay, so now we've added in the Ichimoku Kenko Hayo cloud. We can see it is above the cloud. It is far above the cloud. Again, this is our technical analysis. So usually I would do this first. I'm just showing you how powerful this tool is when it comes to choosing your pairs. The other thing that I would do is AUD USD, I'd go to the pip value calculator and have a look. We've seen here with these stop loss, this lot size, AUD USD. Let's have a look and see how much money it would actually give us. AUD CAD, the AUD USD, there we go. Okay, so £7.47, sorry. £7.47 would be our pip if we had 92 pip movement. In fact, let me show how much actually is. So the distance, let's zoom out. Distance is top blue line. Let me get my crosshairs on this side. Crosshairs. So from here to here, you see how easy that is. It's told me 23 pips, 23.3 pips. This is why I use this platform. I went to price, I clicked, I drag. It tells me pips, 24.2. Simple as that. No guesswork. No removing decimal points. Very simple, 24.2. So let's get this realistic then. So 24.2, 24.2. Let's change that. So that's £1.96 at 0.01. That's very clear on what I'm going to get. That's very clear on what is happening here. So this type of move here, there's a few pounds in it. Where would I set the stop loss? Well, this is cooking. Again, I would have that measured and my risk to reward, etc. So again, I can click from price. I calculate if I want a 20 pip stop loss, that would be down to here. I'd put in my horizontal line. And again, get my crosshair, sorry. Crosshairs measured down. Yeah, that's bang on 20.9. So again, that's my risk. That's my reward, 23. So that's looking at around 50-50. That's not necessarily ideal, but it's quite safe because actually, in fact, that would be a calculated amount. My daughter's screaming at the door. So it's about 50-50. So you're losing about £1.80. If I change that to 20, we'll see exactly. So yeah, £1.60 we'll be losing, and then we'll be gaining, what we said before, 24.6. Was it 24.4? I forgot what it was. But either way, that's how that would work. Do you see what I've done here? So I've worked backwards. This isn't my technical analysis side of it. But really what you're doing is you're looking at the chart first. You're putting your indicators in. You're checking to assess the trend. And as I said before, let me get this back on. As I said before, in terms of Wyckoff principle, we'll be looking to see if this is in a markup, markdown, or in an accumulation phase. This seems to be an accumulation. Okay, yes, yeah, so we've had a huge markup here. It's gone and it's corrected. It's done, oh goodness me, this is actually a very good example. Because what's happened is mini accumulation here, and then it's done a spring. That big wick there is what's called a fake out. So there's been a consolidation block here. It's done a fake out and then a markdown correction and then a huge markdown. Okay, so again, this zone here, you can block it as consolidation zone, fake out, breakout, retest, down. Okay, and then it's come to a certain level, and then it's coming to this zone here, and it's playing around. Again, I would consider this a similar zone, and then it's gone down again. After faking up again, it's broken down, and then it's gone up, moved across, it's gone down, and then this zone here is kind of winding. And this is all August movements. These are the types of things that happen in August. And then again, we've got a spring here. It's come down, it's gone up. Yes, it's on here. It's come back into here and it's bounced up. It's going up, and we could predict that it's going up even higher above the cloud. You take a long position on that. So again, these are the types of things we'll be discussing in the WhatsApp group. I am not, I repeat, not giving people signals. You go ahead and copy other people. You could copy signals all day, get those from elsewhere. There's no need to get extra signals. What we're all about is learning the skill, honing the craft. Okay, so I think I've covered everything that I was supposed to cover today. So what I'm going to do is I'm going to stop my screen share. That's the hardest thing about this Zoom business. Whenever I hide this thing, I can't ever stop the screen share. Yeah, let me stop screen share there. And let's just go back to the chat. So good people, please unmute yourselves. Tell me how you have found today's session. I hope it's been helpful, and I hope people are catching the vision of what the aim is for these sessions. So on a Monday, it will be a given from now on. You have these tools set up. So what we'll be doing is we'll be looking together at the charts. We'll be looking at the charts. We'll be assessing different positions. We'll be suggesting things to each other in terms of whether it's a good pair to trade. We'll be looking at indicators together, and we'll be looking ahead for the week using a 4-hour, 2-hour, and 1-hour chart. And we'll be able to use the group to chat, to take positions, and we'll be trading according to our trading plan. But guys, let me know what you think of today's session and how you feel it's gone. Let me get the chat up on the side. Feel free to unmute yourself and to say how you feel. See the demo as well. Very, very welcome. Very welcome. Where can I get the recording? I'm going to drop the recording into the group. I'm going to stop the recording now, actually.